It is Monday, July 24th. I've been goofing around on YouTube. Your boy is still positive. I will test after this, but as of Saturday, I tested positive. So still got a little bit of a cold, still a little bit like fluffy. I am blaming COVID on not allowing me to go see Barbie this weekend. Did you guys go see Barbie? Sherry is saying, hey, maybe we should invest in Mattel. And the Barbie bounce is already in the Mattel stock. That's my thought on it. Their earnings are coming up, I think, next week. We'll talk about it a little bit if you want me to. But I'm not a big fan of Mattel long term. I think that company's just been mismanaged. I think this is the first time that they're actually taking advantage of the cultural icon that is Barbie. So I can't imagine why they haven't done this type of thing before. It is what it is. One thing that I want to bring up is I woke up this morning and there was a screenshot from Webull about this week ahead, the top 3 companies that are reporting, some other economic stuff with the Fed doing. Just do yourselves a favor. There's a link down below. Join it. Get up to 12 free shares. Put a couple $100 in there. I think it's only $3 to or $300 that you got to put into Webull. It is one of the best apps. And I had a discussion with a Fidelity client, a fellow Fidelity customer like me, who said, yeah, why didn't Fidelity just use the Webull app? They should just buy Webull and get it for the app. That's what they should do. So I hope you're going to hear this because this is where I want to start. This is the week ahead, okay? This is the week ahead. And we're going to push this over here. Kid comes out. And for those of you listening, yeah, it's so good. It's so good. Watch her shake now. Watch her shake. She shakes. And I will include a link to that video on the newsletter. It's fantastic. I mean, let's just say a ninja pops out of nowhere with a Nerf gun. That's all you need to know. A ninja pops out of nowhere with a Nerf gun. Another thing, Savvy Trader. If you guys aren't subscribed to Savvy Trader, go to Savvy Trader, and it's savvytrader.com/daily stock pick. The other thing you can do, if you don't remember any of my links, link tr.ee/daily stock pick. And all my links are there. So you can sign up for Webull, you can get Visible, you can get TrendSpider, you can get everything. The other thing that I want you guys to do is if you see the 5 stars and you haven't rated the podcast 5 stars and you're listening, rate it 5 stars. Go on Apple Podcasts, go to your shows, you can do that. Just rate it 5 stars. But Savvy Trader, there is a contest going on. I am currently number 5, so I'd like to get up higher. I think 60 or 70 subs have signed up, so I know there is 10-fold, 100-fold. Let's see, what is it? Yeah, about 100-fold people that listen to my podcast on a weekly basis that could sign up for Savvy Trader. It's free. I show you what I'm trading in. The trading portfolio is the one. And here, I doubled my thing in Netflix. What I'll do is when I actually buy a stock, I bought a little more Netflix. It's a long hold. I believe it's 430. Seems to be a good place to buy. In my opinion, the expected increase in revenues later this year, I think I can ride this to 500 at some point. Ironically, and this is my trading platform. Ironically, today, let me look. Where is my note? Today, Netflix was upgraded by Baird with a price target of $500. If we go over here, maybe it made its way to FinViz right now. FinViz, did it make its way? July 24th. There's Baird. $340 to $500. That's it. By the way, if you haven't subscribed to my newsletter too, dailystockpick.substack.com, you can subscribe. For those of you that are paid members, I did this free tools and how I determine confirmation, including videos I learned from. This is the paid newsletter. If you're a paid sub, give me some feedback. Let me know what you think. I am perfectly happy to write about what you guys want me to write about, not necessarily things that I come up with. So if you have any feedback, just leave it in the comment below. I limit the comments to paid subscribers on the paid newsletters, so that you guys can comment. If you want, just comment on a Facebook thing. Write me a message. Do whatever you need to do. If you want any of the socials, they're up here. You can even just email me if you want. But that I do like that this newsletter format. It's turned out that I think it's provided a lot more people with a lot more things to look at. TrendSpider. If you signed up for TrendSpider over the weekend, there was a flash sale. If you have TrendSpider and you signed up through me, and you'd like my algorithm or anything, this email right here. So linktr.ee/daily stock pick. Right there, there's an email newsletter. Email me directly. Tell me that you want my algorithms. Just tell me the email address that you signed up for TrendSpider with, and I'll send you an email, a welcome letter. It includes the both algos, the 4-hour and the 65-minute, includes market scanners, and it includes all of the watch list that I have. So you can, while I'm on vacation, which will be by next week, I will be working next week at the Football Hall of Fame, I believe, in Canton, Ohio. So I may be able to do a newsletter, probably not a full podcast, so sign up there. DraftKings. There's a bull pennant setting up in DraftKings on the heading into earnings, let's see. And TrendSpider pointed this out. I will put the picture in the newsletter. I didn't copy the link, unfortunately. But it's heading right into, see that pennant flag right there? That right there, it's kind of right before earnings. Are they going to announce some crazy kind of partnership? Are they going to announce something else? The charts don't know this stuff. Your RSI is at 65. This one has just been a great winner of the past short time. On the 65-minute, it works out even better. This one, by the way, if you bought 8 months ago, you're up 108%. Now, the algorithm, 65-minute only makes you 37%. But you're guaranteed to gain. Do you know that you're going to be up 108%? I probably would have said, hey, hold on to it. Of course, your boy sold 8 months ago. I think it was in November, December, I sold this one. I just didn't see how they were going to make any money, so I sold it. I like that pennant flag that's setting up right before earnings. It's an interesting one to watch. One that tweet that I found pretty interesting. Cathie Wood said her flagship fund is completely out of China. Completely out of China. This to me, remember, Cathie Wood at her core is an economist. And if you've been watching China, you know that they need stimulus in order to stimulate their economy. It has kind of slowed significantly. Even from an oil standpoint, they can't get out of the way of oil, where if their economy was actually growing, oil would be at $120 a barrel. So I think it's interesting that she pulls out. And you can see ARKK, which is the flagship. We had to buy in here at 44. You got up to 50. You got your 10%. Hopefully you got out. That button hook happened. It's kind of coming down. The RSI is down at 52. The MACD is crossing down. I don't think I'd get into this one right now. I like that one just because she pulled out completely of China. It's an interesting one. I will include in the newsletter a shot of Graham Stephan. And if you know Graham Stephan on YouTube, he was a real estate agent, and then during the pandemic, he really got into finance, and so now he's considered some finance guru. The dude is not a finance guru. He doesn't know anything more about finances than you. He just got on YouTube, was a good editor, great on camera, and told people what they wanted to hear during the pandemic, which was, hey, invest. When things are going well and people tell you to invest, my show is just a perfect example. During the bear market, I could yell out the window and reach more people than this freaking podcast. Now that the market is going well, you effers want to tune in. So rule number one, if you're new, rule number one of this podcast is do not listen to a douche on the internet with your money. There is a severe FOMO right now. And I do think that the market's extended. Do I think that you get out of the market? Absolutely not. Do not. Again, good companies, the grade 8 that I've gone over, those are companies you invest in the long run. A very good example are my Netflix buys. And I went over that in the newsletter, and it was the buy side of things. Now, 4-hour algorithm got you out of Netflix with a 3% loss. That 441, we talked about the strategy of earnings strategy by TrendSpider, which is buy 15 days before earnings and sell on the day of earnings. Well, you can see TrendSpider had it right. Buy at 440, sell up here at It got to 485. So you made your 10%. You made a nice 10% right there. That's great. And you'd be out and you'd be able to buy back in at some lower point. I don't think we're going to that 340 down there. I think 420 is a decent platform. I thought 430. I bought in 3 lots at 430 in the 430 handle. I think 432, 435, and 438 is where I got in. Those are the 3 handles that I got in at. The plan on Netflix is to hold at some point in time this year. I think this is a $500 stock, just like Baird said. Remember Baird? Yeah, went over that a couple minutes ago. Earlier today, they said it's a $500 stock. The average target price is $454. Now, that is a PE of 29. It's only a forward PE of 28. Here's the killer. The forward PE of 28, if that comes up to 48, we're at a $500 stock. We are at a 500. Now, they've already said all of the revenue from the password crackdown and from the ad tier is pushed into Q3, which will be the next earnings. So my belief, part of my strategy, and again, it's just a strategy, is to buy here 15 days before earnings. I should have sold a little bit, taken the 10%, probably should have sold that, but I want to build up a position. I didn't have a position in Netflix. Same thing I'm going to do for Meta. Now, Meta's a bit of a different story. Meta's got a little bit of I shouldn't say little bit. It's a significant bit more of a run. Meta has been up just crazy this year. Now, the algorithm over a 22-year period, you lose 10%, but in the actual stock, you would be down 20% if you had bought 2 years ago and just held. The proper play was to add as you were going up over the last 6 months. It's been a great stock, doubled year to date. Let's go to Meta because the PE is not crazy. I mean, the PE is 35. The forward PE is 19. They're up 144% year to date. Target price, 309. They're trading at 294. I said anything under 300, I think I want to add. Now, this is the 4-hour algorithm. You got this gap down here at 212 to 227. Are you coming down there? I don't think so. I just can't imagine that you come back down there. If we bring this volume level back here to January, which is the big time, you can see the majority of people are holding down here at about 192. Does this mean it's a $200 stock? I don't think it's getting back down to 200. I think Meta has 3 things that they're going to talk about on the earnings call this week. I think the first thing they're going to talk about is the year of efficiency. I think they're going to talk about how they launched Threads with 20 people, and it's got as many users as any. I think it was the fastest growing app. Besides, I think it beat out ChatGPT for the fastest growing app. But here's the second thing that they're going to have to talk about. They're going to have to talk about the actual usage of Threads, which is next to zero. Come on. Who's still using this thing? They need to innovate. And the entire Threads app supposedly was built with 20 people. If that app, and I have no doubts in my mind, because remember, when one of the best things that Facebook actually does is imitate. When Snapchat came out with stories, then Instagram just copied and put in stories. When TikTok came out with like their stuff, they came out with Reels. And now that Twitter has come out with something, Twitter had a little flow, or I should say X because they rebranded. But now that that's come out, they've got Threads. They're going to do Threads right. They're going to get some stuff in there. I don't know if it will be an integrated app into Instagram. Maybe it's going to be side-by-side kind of thing, but they'll figure it out. Again, I think they are very good at figuring out copy stuff. They're just not good at launching their own stuff. So I believe that they will copy. I believe that they will, under $300, I don't think you're going to be hurt by that one in the long term. And the reason I say that is, look, you got a 300, this was almost a $400 stock, $381. So I think you're getting back there. I think this one gets back there because the third thing these guys are going to talk about on their earnings is their large language model. And that is AI. And so they are training. They have one of the best AI opportunities out there. They have the data to start to train it because let's be honest. Over the past 10 years, there is nobody better at data than Meta. Even Google has not been good enough at data. Remember Google launched Google Profiles to try and take on Facebook, and they scrapped that. They just had to throw it away. Does Google come out with something? Social media kind of project? Maybe. I don't know. But I like this one. I like Meta into earnings this week. And I'll put up in the newsletter, I'll put up the earnings whisper. Earnings whisper. Where is it? Here it is. This is the earnings whisper. So earnings whispers puts up this great graphical chart every week of the weekly earnings. You had Domino's this morning. You got Cleveland Cliffs this afternoon. That's a personal one that I want to see. You got Microsoft and Alphabet tomorrow, along with Snap. Ironically, in my Webull account, I've got a ton of Snap. They gave me a ton of Snap. You got Visa, which is going to be a mark. You got Spotify in the morning, which this podcast is on. You got AT&T on Wednesday. They'll talk about the lead stuff. You got Meta on Wednesday. You got Chipotle. You got ServiceNow. I think ServiceNow is going to be actually really good. You got Mattel on Wednesday, the Barbie movie. On Thursday, you open up with McDonald's, Southwest, and MasterCard. MasterCard's just going to basically say what Visa says. You got Royal Caribbean, which is probably going to blow it out of the water. You got Enphase on Thursday, the solar play. I've been playing Sedge. Enphase is kind of the same thing. You got Ford, you got Intel, you got Roku. Roku is, by the way, Ark's number one thing. Friday, you got the oils, Exxon and Chevron. I think they're going to come out with blowout earnings again. And if they come out with blowout earnings, oil is going to be super strong again. Charter Communications, and they're in the lawsuit. I just don't like them. But yeah, I think Meta is the one to play. I will probably be buying this under 300. I will be watching this 4-hour algorithm to see does it get me out of there. Maybe the 65-minute algorithm will trigger me beforehand. See how the 65 got you out, and it's got no confirmation right now. So that's the one I'm going to be watching this week. I'm going to take a look at it. I will post all of that stuff. One other thing that I will post is Google's stock performance each full year since going public. Now, the first year it was up 115%, then it was up 11%. 1, 2, 3, 4, 5 years it was down. The largest it was down was 2022. That was 40% it was down last year. Well, you know what? It's up 36% this year. I like Google. I think anything with Google going into their earnings, anything with Google under 120, I think you pull the trigger. I just think you pull the trigger. Again, it's Wednesday, I think. Yeah. No, I'm sorry. It's tomorrow. Tomorrow post-market. I can't imagine that these guys post something bad. Remember, Microsoft tomorrow will probably talk about Azure, their cloud. They will probably talk about their integration with ChatGPT into their Copilot and some of their projections with the Copilot into their Office suite. I think that's going to provide a catalyst for that one. but you've already run on Microsoft. I mean, let's look at Microsoft, for instance. Let's go to Seeking Alpha, because I want you to see a short-term view of Microsoft. We're just going to do this for you. Microsoft versus Google. And I actually like Google for short term. Again, this is short term. If we just look at 1 month, you can see Microsoft's up 3%. Google's actually down. Look at 5 days. Microsoft is down 0.64. Google's down 5%. If you look at year to date, Microsoft is up 43%. Google's up 34%. And Microsoft has a higher PE than Google. I just think Google, remember, the reason Google has lagged behind a lot of these is because AI is the biggest danger to Google's ad business, which is what drives that company. I don't think that AI will actually, you can't call a winner yet. You don't know. Is it Microsoft? Is it going to be Apple? Is it going to be Google? Is it going to be Facebook? Is it going to be someone else, ChatGPT? Is it going to be somebody within that group? Or does somebody come out of, this is like the dot bomb. When I was in the 2000s and you were talking about Cisco, Excite, and At Home, and those guys, all ruling, even Intel, ruling the internet. Well, none of them really came out on top. Microsoft wasn't even like a great stock back then. But I think Google is the one that I would watch out for. I think they're stealth. I think they will have to talk about how Bard. There is one AI that I use constantly. It's Bard. So I talk about this all the time. Invest in the things that you use. There's a YouTube that I want to point out, Jake. And Jake Wu, actually, he was a former TrendSpider employee. Now, I don't think that he uses TrendSpider, but he's got quite a thriving business on Twitter. And I was shocked. I don't know if it's for true, but I guess he did some research, and he may be the third largest subscribed to YouTube or Twitter handle. He's got 223,000 followers. I'd assume that, say he's got 20,000 people paying him $10 a month. That's $200,000 per month he's making if he's got 20,000 people paying him $10 a month for his advice. I like him. I think he provides some great service and actual stuff. I don't subscribe to him. I just don't. I think it's like any other technical analysis that if you get an eye for it, you could guess at it just as well as other people. But he's got great videos here. Finding reversals. I think he uses TradingView now. But I thought I'd give him a shout out. I really like his stuff. Gavin from Facebook asked about AEHR 6 months ago. Now wait till you see this. AEHR. This is air testing. I don't even know what they do. I forget. I know he asked about it a few months ago when it was $36 a share. It's now $48 a share. My question is, it's been doing better than its competitors the past year, but they keep saying the stock is overvalued. What is the right strategy for this stock since I've been holding it for so long with my average share cost at $5.45? Here's what you have. Just got another buy here at 41.42, and God, you're at 48. Some of these high flyers, and this may seem like it's probably not necessarily, this isn't a retail one. I think this one is an actual, hey, it's a small cap name. It's blown up. You can see everybody selling at about 39.40. So I just think that this one, I mean, look at that PE at 97. Forward PE is only 32, so it's not crazy. The average target price is 80. But there's only one person who, William Blair, who's initiated it in 2022. So I don't know that I'd necessarily know that one. Here's the way I would take it. My take on this, and if we go to a weekly, I would probably be taking some profits here. The first thing you want to, Gavin, first off, kudos and high five. Everything that you've done is right on this one. This was a fantastic play. I don't know, I probably said, it's not worth it. Totally worth it. This is the number one thing. Do not listen to a douche on the internet. Do not listen to it. If you know something about a stock, don't ask me, hey, do you think this is a good one? Because 9 times out of 10, if it's not tech, if it's not big cap, I'm going to tell you, I just don't like it. I think there's better places to put your money that are less risky. Remember, I'm 52 going on 53. I'm a little bit older, and I like to protect my money in ways that are a little bit different than most. I'm not going to bet on small caps. I'm not going to play the small cap game. I'd rather have a good dividend stock that may be waiting to pop, like PXD. But this was a great trade. So first off, high five. Second off, what do you do with it? Make sure you've got your initial investment out. Your first step is to sell whatever you can to make sure that the actual dollars that you put in, say you put $500 into this. I want you to sell $500 worth of stock today. If you haven't sold anything, sell $500 worth of the stock today, because that makes sure you're not going to lose money in this stock. You may lose opportunity, whereas, say it goes from 48 down to 20. You may lose half the money that you thought you gained, but you don't gain anything until you sell. The other thing that I'd like you to do is take a look at your tax situation. If you've been holding since 5, there is no way you've been holding more than a year. So if you do sell this, this is considered income. You will pay a very high tax rate for this. Depends on your actual income. I don't know your tax situation, but you will pay, anywhere between 20 and 25% probably, because it's last taxed. So remember, the tax system is a marginal tax system. So it's like filling up a glass of water. Your first 10,000 is 0. Your next 10,000 is like 10%. Your next 10,000 is like 15, then 17, then 20, then 21, blah, blah, blah. It continues to go up from there. So I want you to take a look at your tax situation, and I want you to make sure that if you sell everything, then you actually are comfortable with paying that tax bill, because you will pay a pretty big tax bill. This is why I say hold on to it for a year, because after a year, it's considered long-term. And you know what your tax bill is? No matter how much you sell, because listen, if you're making more than $400,000 a year in the stock market, you ain't listening to this channel. But if you're making less than $400,000 a year, then your tax bill for a long-term capital gains is going to be 15%. And you'll be happy, because 15% is nothing. But right now, you still have confirmation above that 9-day. What I'd like you to do is probably watch something like a 4-hour candle. And if you watch a 4-hour candle on this one, you can see you got in here at 41.22. Now, the MACD is crossing down. The RSI is at 62. Looks like it's either going to take off. I don't know if there's a catalyst in this one again, or if it's going to come back down to fill this gap between 43 and 42. My guess, it's going to fill that gap. Filled this gap on the way up. I think it's going to fill this gap on the way down. I want you to watch it closely, because I think if it gets towards this 50-day, which right now is at 42, and that 50-day starts to turn negative, I think that's when you start to cut a little bit more. Right now, I think you could cut at least your initial investment, if not 25% of your investment, because if it comes back down here, you can always buy back. So I think you actually want to start trimming that one. But very nice trade. Gabe, I saw COYG having a run up after the Alzheimer's trials. Had anyone taken a look at the company and think it's a good long-term play? I know biotech is pretty volatile. COYG. Let's look at COYG. Let me make sure. Did I write this down right? I don't think I wrote it down right, Gabe. Oh, COYA, Koya Therapeutics. COYA. Koya Therapeutics. See, it's biotech. I know nothing about this company. I know nothing about biotech. I can see, let me see, that it had this run up right here. Let's see if anybody's holding. There's a large amount of people holding up here at 5. and you're at 4. CLYA, let's see what the PE and stuff is. So they're over the counter, so they're not even traded on an index. Market cap, it's such a micro cap. It's such a micro cap. There's nothing. I mean, if you want to trade this one, fantastic. This is, pretty much it's not something that you're going to see, oh my God, it's a great investment, because you're not going to see that yet, because it's such a small market cap. $39 million in market cap is nothing. Nothing. Absolutely nothing. And you can see the days when it pops is on news. So my guidance for you is just watch the news. I don't think there's anything that I know about it that I could say about it. Tesla. Let's talk about Tesla. Tesla was downgraded by UBS with a price target of 270. They think it's priced for perfection today. It's at 256. I know last week I said, hey, I might buy this one in the 250 range. I kind of reevaluated over the weekend. I may be buying a Model Y. And I may be one of those that may put in, sell my Model 3, get a Model Y, transfer the full self-driving. That may incite me to get that one before the Cybertruck comes out. My plan is to get a Cybertruck at some point in time. I really do like the features in the Cybertruck, and I like the size of the Cybertruck. I just don't know if I'm going to like driving the Cybertruck, so I'm waiting until they actually have some test drives. I'm not willing to put in an order sight unseen like I did with the Model 3. I love the Model 3. Don't get me wrong. I love the Model 3. I think this one comes down to at least 233 to cover this gap. I think if we start to get down towards 211, I think that you load up on it again. I think this is one where they have enough going for them that on this pullback, I will probably load up once we have confirmation. The 4-hour algorithm got you out with a 60% gain. I mean, can you argue? I was telling you to sell this at 280. I didn't think 300. I said before the earnings, sell it. I just didn't think the earnings were going to justify that crazy run. If you're in this and you're at 60%, fantastic. If you traded it, fantastic. If you're in at 163, my suggestion, don't sell it now. I think you hold at 163. I think you load up and you buy more on the next bounce down. I think you hold it for long term. I have made so many mistakes with this stock over the years where I just haven't held it for long term. Don't make that mistake. Hold it for at least a year. Pay the capital gains tax after a year. Don't trade this one. Hold it. My weekly stock pick. If you didn't know, my weekly stock pick has a newsletter. He's got the best newsletter out there. On Saturdays, you get a nice recap. On Mondays, you get a great stock pick that you can buy on Monday and sell on Friday. That's all he does. And look at those results. Last year, last year when the S&P was down 13%, he was up 13%. This year, he's up 4% because he tracks the Dow. The Dow just hasn't gone up like it has. His pick this week, JP Morgan. I cannot invest in JP Morgan because of the Epstein stuff. So ethically, I'm just against it. I think there's better banks out there. I think Bank of America, I've told you, get it under 30. It's now at 32. I'm up. I got a bunch of those. I'm fine. One stock that I want to point out before earnings is Shopify. SHOP. This one, I just can't imagine they have a bad quarter. I don't think it's priced perfectly. It's got a decent its forward PE is 115. But here's the thing. They have cut cost out of this business. It's up, 88% year to date? It's 52-week range, 23 to 71. You're trading at about 65 right now. Their earnings are coming up. The most recent upgrade from MoffettNathanson with a $76 price target. I think this one gets to 80 at some point in time this year. It's at 66 right now. I'm going to buy it before the earnings. The earnings are actually next week on August 2nd, post-market. So I like that one. Roblox. We talked about Roblox under 40. It's almost there. $40.13. This is where I told you that yellow line is 40. You just buy it under 40 and sell it over 40. Just hold it. If you get under 40, say you buy it at 39 and all of a sudden you go to 35, just hold it or buy more. It'll be up above 40. Roblox is just one of those stocks. Talk to your kids. If they're playing Roblox, then just buy it. Meta, under 300, get it. Taiwan Semi, under 100. This one, I think you can hold it under 100. It doesn't have confirmation yet. I wouldn't get it yet. The RSI is down at 33. It's gone down. I think it's up 0.11 at 97. I think this one gets over 100. You can just enjoy that 3%. Scans, one that I love, PXD. This is an oil. They pay 11% dividend. Their earnings are coming up August 1st. Is it August 1st post? Yep. August 1st post market. It's got confirmation. I was telling you guys, buy this one under 200. It's at 218 right now. So they pay an 11% dividend. I've enjoyed, myself, a few others have been enjoying this dividend while we've been waiting to go up. Another one that I hold long term that probably is not a great trade, but it is for the dividend. MPLX. We covered that gap. Long term, if we go back on long term on this one, I just don't think that you have a huge upside on this. I'm holding it. I like the dividend. I'll probably sell it at some point in time. Speaking of oil, UCO, we had a cross up on the UCO. This cross up on the 4 hour, it's a secondary one. If you bought down here at 23, you're enjoying. Oil has been soaring. So oil has been soaring. The other thing I want to point out is that all the Biden haters for oil, we're pumping more oil these days. We're back to pre-pandemic levels of pumping oil in this country. So we've been doing well. I mean, he's been keeping the price down. Some of the levered ETFs that came up, the short ETFs, I just don't think you can bet against this market. But SDS, Ultra Pro, short of the S&P 500. SRTY, short of the S&P 500. SRTY right there, 35.70. Another one, SPXU, which is the big boy. This is the one that trades a lot of volume. This is triple levered, $10.01. You're at $9.98. Again, it's triple levered on the downside. So essentially, when the S&P goes down, this goes up. So another one that came up, American Electric Power. There's a utility. I haven't been a huge fan, but just got back to the 200-day. Probably going over the 200-day. If you like utilities, again, if your name is Walter, you smoke a pipe, and you put a blanket over the top of you, and you talk about the old days, that is the guy that invests in utilities. It's nothing exciting. So, okay, let's talk about sponsors. Just go to Linktree. TrendSpider, it's 25% off. I give you all my stuff. Just email me. Visible, $20 off your first month phone plan. If you don't have Webull, get Webull. That app is so good. Plus, throw couple $100 in there. Use this link, and you'll get up to 12 free stocks. I'm telling you, it's so simple. They make it so easy. And their morning summary that they have where you just scroll through, I find it super, super helpful. I really do like it. So if you have any questions, hit me up on the Linktree. You can hit me on email. You can hit me on the private Facebook group, on Twitter, on Instagram, or YouTube. But remember, go and subscribe to the newsletter. First off, dailystockpick.substack.com and Savvy Trader, savvytrader.com/dailystockpick. And go and subscribe to those two things. If you have any questions, hit me up. I will talk to you guys tomorrow. Hopefully I'm negative. I'm going to be testing after the podcast. So thanks, you guys. Talk to you later.